Hello everyone. So this is my first stream. I'm Sheikh Sudam Sharif and I'm currently in final year of BTech. I'm currently studying in NIT Rourkela. So today we're going to discuss about tomorrow's market analysis. Before that, let me check my setup. Am I audible? Yeah, just give me a little time. Hi, hi. So am I audible to you? Is there any disturbance? Okay. I'm checking my setup. And I'll share you my screen in just a minute. So, okay. Can you guys see my screen? Yeah. Okay. So, today is 2nd of April. Today we're going to do some analysis and I'll tell you how my analysis happens. I'll tell you how I am trading right now and how what are my strategies, all that. But I hope you are already known of the concepts, some of the concepts like order blocks, basic concepts like liquidity, some of the concepts of ICT and smart money trade, SMC, these things. I hope you know that. Uh, if you don't, we are trying to make videos on that also. But before that, if you are already aware, then let's get into the analysis. First, let's do the analysis of today. So whatever I do, first I pop up my trading view chart and I'll go to daily time frame. So this is my setup. Okay, let me explain you what my setup looks like. So these are the watch list that I have, which is XAU which is gold, which is the mostly what I trade. I mostly trade gold in foreign exchange, and BTC. BTC is my second most traded asset. After that, I'll use DXY only for understanding the flow, the direction in which the market is going to go, because there is an inverse correlation between gold and DXY. If you already did not know that, it's all right. They both move in a different directions. So if DXY moves up, gold is potentially to move down. If DXY, you can also observe right here, as this is the 5 minute time frame that we are on. In the 5 minute time frame, as the DXY is increasing, you can see that gold is coming down. See, a red candle has been formed. So they have inverse correlation in that type of way. So that is one thing to look at. And these are the pairs that I trade. These are all major pairs mostly, but I trade Euro USD, uh, sometimes, not much. I only trade mostly gold and Euro USD. After that, we have USD JPY, which is a good one to trade as well. There is a there is a good movement in that. I feel it could give us a good trades as well. And as you know, these are the cryptocurrencies that I trade. So after after taking all of this, so let's get into analysis of XAUSD. So now the time, as you can see, is 10:11. So market has okay. Let me explain to the peak hours and how the things happen. Uh, so a market has three. Let me try to write over here. I'm using my trackpad, so it's a little difficult. So wait. Mhm. So let me try to teach you how the market works first. I'm just getting before getting into the analysis. This is my first stream, I'm just gonna tell you how the market, how actually gold works and what is its timings and all. So in the morning, Asian session happens. I'm trying to write it. Please try to understand that is Asian session. So Asian session happens in the morning. In the morning, from okay, let me tell you only the peak hours in Asian session. Asian session is from morning 4:30 to 2:30 to 10 o'clock or something. So what are the peak hours? The peak hours are for Asian session is from, as from my experience, it is from in Indian Standard Time. It is from 7 o'clock in the morning to, I think, probably 10:11. Yeah, 10 11, around that. This is the Asian session timing where people from, I mean, the Asian investment bankers and people from those sides usually trade. So this is the Asian session. The end the after the Asian session we have London session. London session, we have London session. Mm, so London session is from wait, I have something to do. Wait a second. Okay. So yes. So for let's okay. We were talking about London session, right? Or see, Asian session, as I told you, starts at start. Let's say leave the start. The most important thing we have to remember is 7 to 10. It has the most volatility. So today, let's see today's chart in the morning. This is the 5 minute chart, by the way. So in the 5 minute chart, in the morning, 2nd April. So the market opened at 2:30, I think. So yes, market opened over here. Market opened over here. Then it just fell down. It fell down to cover the fair value gaps. If you don't know what fair value gaps is, we'll teach that in the next upcoming sessions. Those understand that is it came back to fill the fair value gap, which is presented over here. So after that, what it did was it traced back to upside, to the upside. But the most volume that came was around 5:45. After 5:45 and around this timings, this is where most people trade. So how do you identify that the volatility is more? That is by volume. I have indicator over here. This shows how much volume is going to be traded. So as you can see, the peak hours is 6 to 7, 8 o'clock. These hours, these let's say 10 o'clock, 11 o'clock, these hours are important because these hours contain lot of volatility, lot of volume. But I usually avoid trading at Asian session because Asian session is mostly I use it for getting today's analysis today, what is going to happen, what is the direction of the market. So for learning that, I'll just understand it. But usually I mostly prefer to trade in New York session, which is the last session of the day. Sitting in India, I'm telling you about it. So it's the last session of the day for me, but it there is that is where the price action is followed the more. Oh, so I was telling you Asian session is there. So London session is from 8 to 5 p.m. But the peak hours is from 11 to, okay, wait. Hmm, so 11 to 11, or let's say 10 to uh, 10 to 5 o'clock. No, 10 to, 8 o'clock. Sorry, 5 o'clock. Sorry, 5 p.m. This is a 10 a.m. to 5 p.m. is London session. So after that, this is the most important session. In London session, we have a good price action, but not a great time to trade because the formation of trades are very less in London session. But liquidity formation is very much high in London session. I will tell you how that happens. And the last session which I prefer to trade is New York session, NY session. So no, New York session usually is from oh wait, okay. So okay, sorry, I have give me a minute. Okay, so see, the New York session is from 7 o'clock. From no, it has changed, I think. So let's say 5 to around 8. I'm just telling you the peak hours because I know the peak hours. So peak hours is from 5 to 9:30. Before it used to be 10:30 for me because after what happens after this time is the price action starts to fail. And because there is no volume at all, so I will show you what happens is the consolidation happens. So these are the peak hours. These are peak hours. In the afternoon also there are hours like 2 o'clock to 4 o'clock and 5 o'clock, where price action volatility forms. It mostly consolidates. Before going into all that, let me show you how the market is today. Today, what is happening in the market, so that we can understand the in a better way, because practicals teach you better than anything else. So let me clear this for you. Yeah. So okay. So today, let's go into the daily time frame. Every day, what I do is I go into the daily time frame. So this is the daily time frame of gold. Hmm. As you can see, this is the daily time frame of gold. What is the price action over here? What is market suggesting? What is happening? These lines. Okay, let's take a fresh graph and then explain it to you. Yeah, this is more fresh and okay. So see over here. So what I do is every day I go into the daily frame. As you can see, the gold is fundamentally bullish. That means it wants to go up. It as it's a appreciated asset or all over the world, it definitely does go up. But what we are trying to do is we are trying to capture. We are not trying to invest over here. We are not trying to invest. We will try to capture that fine amount in certain time frames. Let's say I am going to enter a trade in a 1 hour time frame. We are going to predict what happens in the next 2 or 3 hours, and we'll get out as fast as possible. We're predicting the market to go. We will take as even though fundamentally gold is bullish, we also take short trades depending about our strategies and insights we get. So how we are going to do that? How is this happening? So before doing that, we have to understand uh, minimum basic concepts. I have liquidity is one of the most basic concept, but it's a very great concept. So if you already know about liquidity, you can see what happened over here. Just a little example. So if you already know what liquidity and order block is, so this is an order block. When trend is moving up, or a trend is following. When the trend is following, if there is where there are so many green candles, like one by one there is a green candle forming one by one, and suddenly there is a red candle over here. So what does that represent is these here are the people. There are the people who are trying to sell, but they couldn't sell properly. What happened was there are sellers over here, but they couldn't sell properly. So what happens is if anyone wants to buy, what they put is they put their stop losses below this level. This level is what we trade up below it. So below this level, we will trade and we'll understand what will happen. So as what why is this happening? This is a concept that we have to learn. But let me those of you who already know what liquidity is, you can see that it took the liquidity over here and it rised up like anything else. See, it took this week's liquidity and it rose like anything else. From where was this date? Yeah, it was 6th February. So after finding a resistance in 2954, it came back. It came back and took liquidity at 2833. And after taking the liquidity, it just shot up. So that is why it's like somebody who trades in the 1 day time frame. He is still holding. I think he's still holding from here. So the trade goes like he will use some confirmation from in this week, which will be in a lower time frames like 4 hour and 1 hour. He'll take the confirmation and he'll just trade with the stop loss below this level. So that is how you should be trading. You should be understanding the potential breakthroughs and potential outages here. So before that, before we go into that, okay, let me pause here for a minute. Uh, Sorry for the delay. It's nothing. So back to the charts. So let's do the analysis. Before I was just telling you how it works and how liquidity works and something like that. But we'll discuss that in another video. But before that, today's market analysis and tomorrow's market analysis is very important because at 1:30 a.m. today, Trump is gonna speak live, and he's gonna tell us about the tariffs he's gonna be imposing on the different countries. So this tariffs is very important. This speech is very important because all of the countries are relying on this, because the imports and exports between the countries is most important for foreign exchange, because it is what everything depends upon. So foreign exchange depends upon imports and exports. So as it happens, if something wrong, or if Trump goes on exposes, and he just imposes a lot of taxes, a lot of tariffs over, let's say, Canada and all the China and these things. If people don't like it, what is going to happen is the rate of the dollar, the DXY, is going to fall. So what that tells us is the gold is going to go up. So as its inverse correlation, dollar as dollar goes down, the gold will try to go up. So if the tariffs are permissible, and they think that's a very good sign for US dollar, so what happens is DXY tries to come down and down, and it will go down, which will inversely take gold. Sorry, DXY will come up, it will go up and up, and which will conversely take gold down and down and down. As it is already at the all time highs, the possibility of it go coming down is a lot more. If something happens, if something happens that's good for US. So in the future it's going to happen, but today, is it going to happen or not, we do not know. So, how the market analysis for tomorrow should be, or how the market analysis for today should be, let's talk about that. So, I go up to the daily time frame. As you can see, this is the daily time frame. So, what does this tells us is what is the trend that is happening right now? And I have also written over here: the trend is your friend. Yes, your trend is your friend. Believe in the trend. Whenever there is a trend following, just believe it. You might just win most of the time. So if you can see from here, gold is following an uptrend from here, from what it was 2584. From here onwards, it's just following uptrend, and it took a little detour over here, but still it is an uptrend. So what is telling is, until no confirmation, we should treat any asset to be like to be in a way the trend is happening. So if the trend of gold is up, try to find trades in up direction only. So you have to go long. If the direction, if the trend is down, you have to find direction towards the downside to sell. So, but as you can see, this is the 1 day time frame. In the different time frames, different trades will open up. So I'm not telling you to not sell because 1 day time frame is bullish. So depending upon your time frame, what are you looking at, that depends upon it. That trade you take depends upon the time frame you're looking at. In Even though gold is bullish in 1 day time frame, it might be bearish in 1 hour time frame, also 5 minute 15-minute time frame. So you can take short entries over there. So it's always depending upon the time frames and how you are viewing it. In the long term, it's good to buy gold, everybody knows that. So as you can see also from today, in this year, I think gold has risen above 20%, about 20%. That is very lot. So gold is fundamentally bullish. That's what I was telling you about. So 1 day time frame analysis, let's do this. We go a little back like 26th March. From here, if you guys know about order block. Here is an order block that's formed over this point. Please do try to learn this concept. These are very important concepts, by the way. If you have any doubts, please don't hold back. Please try to ask that questions. I'm here to clear them. Any doubts? Any doubts with the what are the trading sessions? How is this happening? How is what happening? As we are currently live, we can understand. We can interact with ourselves, and we can understand how the market is doing. So let's go into the chart for today time frame. It's so in today time frame, in 1 day time frame, the gold is bullish. You can see that. So from here, this is an order block. This is an order block which has a lot of orders in it. If you don't know the concept of order block, it's all right. But just try to think of it as a point where people try to buy. This is the region where people want to buy. That is the that is the thing, right? If you want to know the levels where buying and selling should happen. So order block suggests in the upward in the uptrend, what it suggests is formation of this red candle. There are a lot of orders over here which can be taken back again when the market come back to it. So these concepts, I will make videos for this and explain to you what everything, what are order blocks are. I make a single video for order blocks because those are very important. Order blocks and breaker blocks, how they work, how are they fitting into this. So before to understand that, to understand the minimum things for now, understand that from here the buying happens. So but it is very far away from here. So this level is like 3034, and gold is now trading at 3131 because it is already 1000 pips above. So it will come back, but maybe not tomorrow. Definitely not tomorrow. So what we are going to trade, if you see, what how much gold trades in a day, from how many pips it is trading. So usually, in trading a gold or asset. So wait, an asset. So $1 over here, which is showing up on the screen to you, 3129, right? 3129 point 064 or 084 or something. So what does this suggest is, so this is the one Oz, one Oz, one Oz amount of gold का value. It's a value of one Oz. One Oz is a unit of measurement in weight. So this much weight costs $3,129. So what does this represent is, in trading, usually what we talk about is 3129. If it moves to 3130, which is currently is in let's say one 3130, which is a $1 gap. $1 gap. What it senses, what it says is it moved a dollar, but in our sense, what we say is it moved 10 pips. In trading point of view, $1 is equal to 10 pips. So that is why I was telling you that gold is 1000 pips above the order block level which we were talking about before. Okay, so let me take this all of for you. Filter this. Now, as gold is bullish, but yesterday, this is today ka candle, today ka total candle. Normally gold is trading like 3077 to 3126. This is the normal grinding that is being formed in gold nowadays. So how much pips is this? 77 to 3127. So almost 500 pips. So almost 500 pips. 500 pips candle. So what is it? Gold is trading in 500 pips region in for one day. In one day, gold is being traded in those 500 pips. So that's what I was telling. So tomorrow it won't come crashing down from there, except if there is a news that is huge enough to impact that. That almost never happens. So next tomorrow, for tomorrow, what is the analysis? Let's say gold is in bullish mode. From my experience, gold is in bullish mode. So here, normally what happened is it is trading at all time high, because if you see, gold is at all time high. This is all time high for gold. So it has been breaking the all time highs from here. It has formed an all time high over here. It has broken that level. So this was the level before at around 21st February, 24th February, at the starting of March. It was the all-time high for it. After 13th March, it has broken down that level and it came back. It came up. It came up. It broke out from it. A breakout has been given, and after that, at this level, which is 2955, after that, at 3000, we have a little order block which has been filled, as you can see, which has been filled over here. The order block has been filled over here on 14th March. The order block has formed, and on 21st March it came back and took the orders, and it's been going ever since. That is one trade to do. So here is another all-time high. I'm just marking out the levels of all-time highs. So now the all-time high is over here. So as you can see, every time a red candle forms, normally after red candle forms, that suggests that there is a resistance over this level. So this level is around 3148, which is which suggests that gold is taking resistance from 3150 level. At that level, it is finding resistance at all time high. So from that level, we understand that gold is taking a resistance. So what does this candle suggest is it tried to go up, but sellers pushed it down to almost over here 3100, and a little bit up 3112. It closed it over here at night. So next day it opened up, which is today. Today it opened up, no gap up or gap downs, just it opened up the same level. Then it just fell a little bit, and it formed a wick for a daily candle. After forming a wick, it just went up. Normally people think that it will go down, but it has not fully taken the orders it needed. So if you can see here, the same thing, if it is seen over here, this is the red candle that's been formed for these people. For these dates, it is the all time high. So after this, what happened? It gave a good rejection, and it came back to that order block level. So for it to come back to a good level, or in the one day time frame, it is over here. So it is not easy to come back to it. So it just won't do that. It will take a lot of time to do that. So as for gold being fundamentally bullish, and as I understand by experience, as I understood the gold, what happened is what is happening with gold is it just doesn't. If the order block has formed here, I mostly like to think it would have come down. But as the order block is not anywhere near the level, anywhere near here, So it is trying to, it's just consolidate, it's just consolidation over here. So if we go into the lower time frames, in the 4 hour time frame, you'll see what I'm talking about. So here there was an uptrend, but after that, what happened? It is just consolidating right now. It is just consolidating in 4 hour because it has no clear direction. Even if you want to go up, it has to find some orders. So it is struggling out there. And DXY, what is DXY doing? DXY is falling down. DXY is falling down, which suggests that in the 4 hour time frame it is bearish, it is turning bearish. It has given a great red candle, suggesting it is going down. So it might go down, but as the news hits, we don't know what will happen. So no one knows what will happen in the news. I mostly avoid trading in the news. So let's analyze gold for a minute. So what is happening over here is, in the four, as we saw daily time frame, a red candle has been formed for yesterday. Today, gold seemed to be a little bullish, as it not mean I don't mean to say it's bullish. It's not bullish. It's consolidating over here. This candle suggests that it's gold is consolidating right now. Tomorrow tomorrow at 1:30 IST time, because of news, there can be two possibilities. One, it can break over here, it can break this level, which is it is currently trading at 33128, 3129. It can break. If USD falls further down, it can break this level, or just cover the fair value gaps over this level and fall down and consolidate over there. So, or there is a possibility that if if dollar goes up, then the gold will come down. So those are the two possibilities. They will come down to, it has to come down to the level, at least to the this all time high. To This is a breaker block. If you guys know what a breaker block is, you will understand that. So this is a breaker block over here. We'll come to that concepts after, but what I'm trying to say is, this is the level it should come back to, at least, to rebounds and retrace. But before coming to that, it will dance over here, it will consolidate. Okay, let's analyze in a 4 hour time frame. 4 hour time frames seems consolidating right now. So gold from yesterday, one first April. So 1st April, this was the candle at 2:30, 4 hour candle. So after this green candle, suggesting it didn't take any resistance from here. It gave a good up move to the all time high. It formed an all time high over here. So it took a resistance from 3150, which is a round number, because these 50s, 3000s, 3100, 3150, 3200, 3175. These are all round numbers, which are historically seem to affect the way the assets are traded. For Bitcoin, it's 100,000. How it behaved, it fell down from there, from 100,000 and 99,000. So how it behaves is, it forms the what happens is, sellers are trying to sell, buyers are trying to buy, and buyers will have their profits to a certain level, that is 3150. So they will have their profits, they don't risk it. So what will they will just have their profits just below that, like 3149, as you can see here. They will have their take profits over this level. Most of I mean, people think 3,150 should be the target. No, because it might happen it will, the sellers might come fast before. So what will they do is they start selling from 3149. And also, who are the buyers, they have already kept their profits at 3149. I as a trader also, if I'm looking for all time highs, I just trade below the whatever the figures, that is 3150, 3000, these round numbers. I will trade below that, $1 or $2 below that, 1 or 20 or 30 pips below that. So it's better to do it, because here is an example, real life example over here. So here, what happened was 3150 expected to go, but it didn't go. It just went 3149 and fell down. So yeah, that what is suggest is, the take profits were set there and sellers started to sell there. So that is just understanding the market. So from after that, what happened was they formed a great green candle, red candle, which suggesting there was a resistance over there. Then it formed this small green candle afternoon in the London session, 2:30 candle. So in 2:30 candle, what is suggests is, it for it tried to go up, but it couldn't. And if you see, it is a Fibonacci 50 to 60% level, that which I will also explain to you what is Fibonacci, and how it is forming over there. So it formed a wick over there and it formed a green candle. And what happened after that is a good indication for the market. So after that, the market just fell down from this level and this level. From breaking this low, which is 3124, it broke this level, and it just went all the way down to 3101. But as you can see, it didn't take the liquidity over here. uh, if you observe it, it didn't take, there is a lot of liquidity over here. As I told you, this is an order block in a 4 hour time frame. This green candle, this red candle is an order block in a 4 hour time frame. So liquidity is there below this level, but it didn't take that liquidity. It just went to this order block, and it I think it covered the fair value gaps, and it just went up. So it is possible, if it comes back to this level, it will take the liquidity, and then it will definitely go up. That is one form of analysis where we can do. So coming back to the latest, this red candle that has been formed imposes and says that gold has in 4 hour time frame. What happened is, this is showing it needs to find the orders to the downside, and it found orders over here, and it took to the upside. So but it is not going above this level, 3133. Why is it not going above this level? As you can see, there is an order block over here. This order block over here, this level, which is resisting it from going up. So whatever the outcome is of today's news will decide if gold is going to go up or gold is going to go down from here. So I mostly prefer if gold goes down, because more trades are possible for us. If you want, because you can understand what levels are there. If it goes up, you just have to guess where it will stop. It won't give you a clear direction, clear indication, and clear trades to trade. So I would definitely want it to come down, and I think also most probably will come down. So after coming down, we can trace it back and take long orders, or we can sell also offer confirmations after forming of change of character and all. But this is just in a 4 hour level. As we go deep inside to the time frames, we will understand better. But in 4 hour time frames, the gold seems to be consolidating after forming a good green candle, without taking liquidity. It is retesting this order block level right now, which has already given a great indication of resistance. See, after going to this level, it formed a red candle, and after that it formed a green candle over here, but it just didn't broke this level above, and after that it formed a red candle again. Now it formed a green candle again, but it's not breaking above this level. If it does break above this level and closes above this level, which that indicates that gold has become bullish, and we should look for bullish entries over the all-time highs. So that is the analysis in the 4 hour time frame. So in the 4 hour time frame, if we want to take buying, if you want to take buying, the buying I would suggest is below this liquidity level. After taking this liquidity, only after taking that liquidity level, we can take trades in the 4 hour level. So 4 hour level, let me mark it for you. So this is where liquidity is. So yeah, if it breaks down this level and forms a green candle in lower time frames like 1 hour or 15 minutes, then you can possibly think about going long. If dxy is also consolidating or falling, that suggests that gold has a potential to go up. So that is what analysis I have in 4 hour time frame. A liquidity trade, one trade that could be taken over here, or we can go into the, and also we can wait for this order block to follow this order block, which is a great order block if you ask me. So but it has a lot of wide range over here, because 3098 to 3078 is almost 200 pips. It's 200 pips. So it's difficult. If we go into lower time frames, we might able to expect what will happen, but it's still a bigger risk to take. If you're trading in 4 hour, I would suggest you take the order after taking this liquidity level, and after testing this order block, you can take a long trade from here to all time high. That is what I would suggest. So that is in the 4 hour time frame level. So as we go down into time frame, 1 hour time frame, we'll see trades over here as well. As you can see, it's still consolidating. Is it's just consolidating right now, because before news is at, as you can see, reciprocal tariff plan announcement, which is 130 3rd April, which says ki it depends. This all consolidation, this all liquidity that's been forming below these lows and highs, this suggests ki it has no clear direction. Nobody knows what is going to happen. So it's not showing a clear direction over here. So this is the time where you avoid trades. We will trade only after having a confirmation. Before having confirmation, we just do not trade. We don't have to trade. So as I've read a quote that says ki trading is 10% buying, 10% selling, and 80% of the time it's waiting. So we'll wait for our trades and we'll take it. So before gold, before any asset coming to that level, we have to have a fair strength and fair understanding. If it comes back to it, then I'm going to take the trade. That is how we should be. Not like, yeah, it's consolidating right now, it's going down right now, I think I should take a short trade. No, it's not. That's not how we should be taken. We should take after confirmations in different levels. So in 1 hour time frame, it seems to be consolidating. I can tell you ki from here it started today. So today it started and it moved up, it consolidated, it moved down because of the order block as I told you, and it moved up again because of this order block which has been formed in the 1 hour level. So these all things what it suggests is gold is just consolidating right now because no big move right now. Big moves will come after the announcement of tariffs. So before that, if we can find a good trade in lower time frames, it's all right. If in the consolidation market also we can trade, but it is risky. So this what it suggests is the currently consolidating. So this time frame, this order block has been satisfied. This order block satisfied over here, and it gave it up to this level. It tested this level and fall back. And normally, what should happen is it will form back from here, but it didn't. It took liquidity. It did. It took a little liquidity, and it just trying to go up. But I don't think it's just consolidating right now. But it would be great if it comes down because the trades are forming to us in the lower time to the downside in the 1 hour time frame. So as we go in the 1 hour time frame, that is what I would suggest. And there, we can also see order block over here. If you want to see a 1 hour order block, this is the 1 hour order block to refine our trading and all. This is the 1 hour order block. So you can wait for this level, or as you had four 200 pips in the 4 hour time frame. In 1 hour, we just have this 3089 to 3078, a lower region which can give us lower stop loss and could give us profits to a good ratio. So having the good risk to reward ratio and forming these things is very important. So as you can see now, gold seems to be falling. We will see how DXY is doing. DXY has fell a lot today, so it has no clear direction. It seems bearish for now. As you can see, it seems bearish. Which suggests that gold will go up, but gold is also coming down. That is why what it's telling is gold has no clear direction right now. Neither does DXY until the news comes. They just are following anything that they have to follow, like price action, like Fibonacci. They're following something until the levels that should be taken care of. So we were talking about 1 hour time frame, which just suggests key little trend line forming over here. But I would definitely suggest do not trade trend lines in gold. It is it rarely happens that it follows that. So yeah, I'm just showing you for education purposes, but don't try to do that. Don't try to trade using trend lines. Just for understanding it, it's fine. So after 1 hour time frame, we can go to the 30-minute or 15-minute time frame, which we can locate it more accurately. So as we go into the 15-minute time frame, we understand how minute the levels are forming. Here, where for our order block, for our order block that we have changed the chart, I think, right? Yes. So yeah, let me draw the trend line for you. See, let's keep an alert over here. Liquidity zone 3100. If you can see, that's 3100 level. That is why this happened. You can see that there's, yeah, uh, yep, 3100, which is a core level as well, which says that gold follows. These assets follow a round number. So what happened from here? It tried to fell down on 31st March. It tried to fall down. It fell down to a level where lot of buyers are there. So lot of buyers are trying to buy from 3100 level, as it is trading above 3120. They are eager to buy over here, and they bought, and it took them to 3150 almost. So yeah, that could be taken as well. But the trades for tomorrow, and how should we trade for tonight? That is the main important thing. So as you can see, it's following a little trend line, but I would suggest not to do that. And it formed a little resistance. There is a resistance over here, which is the order block level that we have already just marked in the 4 hour time frame. 4 hour, 1 hour time frame. We have already blocked that. We have marked this order block. So if you see that, if you go into lower time frames, you'll understand what is happening. So as we go into lower time frames, you'll understand key there is also an order block over here at this point, which is a 15-minute one. So this is the 4 hour one, which is a longer bit with 200 pips. This is with 100 pips. This is with 784 to 3078, 60 pips. So as we go lower the time frames, we'll have better trades and better risk to reward ratios. So always try to analyze from the daily time frame to the minute level of 1 minute to 5 minute time frames. Understanding. After understanding, making an entry in 5 minute level and 15-minute level will get you a lot a big risk to reward ratio, and will take your risk management to another level. So that is what I would suggest. So now for today, as I told you, the gold is consolidating over here. It broke down this level where change of character has happened in 15-minute time frame. In 15-minute time frame, the change of character had happened. So after this level, what it tried to come back to that level. It broke that level. It went up to this. Sorry, it retested this level. We didn't see that. So let me mark. Here was a trade that I didn't see. So see, this is the trade that we missed on. So yeah, it retested the change of character level over here. Retested and it fell down. So that was the trade that you should have been taken. We should take that. Vysayaski, it broke down. This candle says ki it wants to go down. It needs orders from here. So as it needed orders, it is the next liquidity zone is over here, but still it did not take the liquidity, but it still went up because the buyers over there in this liquidity zone, the buyers are a lot more that it went from here only. So that is why, as I always tell you, to have stop losses and take profits at 10 to 15 pips below or above, have a little buffer in your take profits and stop losses, because that always happens. Most of the time it always happens. So it retested that level that your trade would be for today at no, it's for yesterday. It was yesterday. So yesterday at 8:30 the trade was to the bearish side. It will be like this. So while back testing, so you will put stop loss till the fair value gap and try to see to the next liquidity zone. This is a is almost 200 pips, and I normally actually remove, um, have my take profits around 200 pips. That is the max I would go. That is the max I would keep, because not being greedy is also a type of risk management that we should acquire. So 200 pips is the most I would go in a trade, uh, any trade. So my take profit will be over here. So that is how I trade. Somebody might take out in 100 pips. Somebody might wait for this liquidity zone and get nothing over here, because they have to take out at break even over here. So, so that is why understanding how this works and how this goes is important part of it. So that was one of the one trades that could have been taken. And what else is there? This is all consolidating, so I would definitely not trade in this area where the market is trying to consolidate right now. So now, even now, as you can see, the 15-minute candle has opened, but it is showing a bearishness. It is showing a bearishness, but we'll see. We don't have confirmation until it breaks this level, and breaks down below these levels, this area, and closes below that. That is also not a confirmation, but still we could take that as a confirmation and go into short trades. We could not just sell from here and say "Ki this is a good trade and we can do that." No, we just have to have the confirmation. So if you want to take a liquidity from this level and it wants to go up, it might go up. It's just consolidating. So that might also happen. So what we, as a trader, what you have to do is trade probabilities and possibilities, and have to have that risk management as much as possible, to have a 1 is to 2 ratio or 1 is to 3 risk to reward ratio, which will, even if you lose 3 or 4 trades, if you win one, which can cover all those losses. So that is how trading should happen. So this trend line might, it will, let's see if this trend line holds up. If it does hold up, I don't think it will, because as we are approaching now, it's 11, so it has to give direction to us where it wants to go. It might not as well, because there is the, let's see the volume, how much volume is present right now, because volume will tell you what's happening. Because as if there is a more volume, then people are trading it, and people are having a direction, what direction they want to go. So that direction we can take that and we can understand. So as you can see, the peak hour was 7 o'clock, which is New York session opening time. New York, actually, it's opening time for this market, USA market. So US market opens at 7 o'clock. So that is why we have a great volume over here for that time. And after that, it's just consolidating, man. It's all consolidating. I wish I could tell you more, but actually, gold is really consolidating right now. See this level from this channel, it's just consolidating. So until it breaks out of these levels and closes, we have no confirmation of where it will go. That is what I wanted to say. So that was the first trade, the trade I have explained you, that could have been taken. I'm changing charts, it seems. Uh, yeah, I'm changing charts. So yeah, this trade should have been taken. This is a good trade because it retested that level, and you have a 45 to 50 pips of stop loss, and you have a risk to reward of 1 is to 4 if you are going for the 200 pips, or if you're just I just want to break out of this. As you took this in 15-minute level, you try to find the 15-minute liquidity level or 15-minute order block. So as you can see, there are order blocks over here. This level, there is a liquidity zone over here, so you can use the market structure that has formed, and just have this level to be your target, and still it will give you 1 is to 2.4 is to reward ratio. So yeah, that's how it should be done. So yes, so here if you want to take a trade at the order block, which is this is at a 15 minute, this is 1 hour order block, I think. So in this 1 hour block, it came down, and it just traced up to this resistance level. So yeah, these scalps, I would say this is a more of a scalp, but this is a good trade as well, because you could take that trade. You could take this long, as gold is bullish, so you could take this long. So in this level, you start trade over here, have stop loss. As it is a 1 hour level, we will have a bigger stop loss to 70 pips and all. But we can reduce our stop loss by going to lower time frames like 5 minutes and see what's happening down there. And we can target to next order block. Next order block is, this is the order block. So here here will be your target. So 1 is to 60 is 1 is to 1.5 ratio. Fine as well. You can decrease your stop loss if you are already in profits, and manage your risk. Anyway, that can be done, but still in consolidation, doing trades is a little difficult. Then yep, that is all for today, that is the analysis. Today's analysis, we had a trade over here which we tested after change of character over here. So that is yesterday's trade actually. That is yesterday's trade. Today we didn't have much of a trades. In the morning it just went up. The fair value gap covered after that. The fair value gap that has formed here, they've been covered, and it just went up from these order blocks. This is a 1 hour order block, as I told you. And if you as you go into lower time frames, you will find this smaller order block as well. But the order blocks which are formed at a lower volume, I mostly ignore the, because the volume at this time, which is 4:30, is very low. That is why I ignore these kind of things. I take the only those kind of order blocks which has had a lot of volume in it, and still they tried to form that order block. If they had a lot of volume and they still formed an order block, that means that it is a valid order block, and I want to trade in that. That is one way to go about it. So as you can see, it's still maintaining its course, and it's just consolidating. So the analysis for tomorrow or 1:30 p.m. is just, as however the news comes, it will give us the right price action. It will break out of these levels, and it will show us the price action, and it will retest it will retest it will retest those levels and give us trade, because it just will, because people have to trade, and people will do it from levels, and they should have stop losses. So we should be able to take those trades and understand how those levels are forming. And still we can scalp over here, but I would not recommend scalping, because in consolidating market, do not try to do that. So yes, those trades. And if you want to trade trend lines, maybe if it comes back here and have a little confirmation in 5 minutes, then you can take that in the consolidation. If it breaks down this level, you can take it. If it breaks down this trend line, you can take the trade after retesting of this trend line again. when it comes down and comes back up again, we retested stresses and have a 5 minute red candle, then you can put a stop loss above that high and trade below to the next liquidity zone, which is over here as we have talked before. So that is the analysis for today. Today, nothing much. That is how gold consolidated today all over all the sessions. Even if the volume is up, it just traded like consolidation. But still, it has moved a lot. 31352 to 3110 is 200 pips. It has moved in 200 pips. It just did not move in 20 or 30 pips or 30 or 40 pips. It moved a lot, but it's still consolidating because it doesn't have a clear direction. But as you go into the 5 minute time frame, you will find a little more direction that yeah, something is happening like this, and you can trade. Like let me show you what I'm telling you about. So after this level, mm, so see here in the 5 minute time frame, it took a resistance from here, which is a market structure. This week, this is a, one of the good concepts in trading is market structure. How market structure forms, how why it takes a resistance from this level, which shows that there is a liquidity at this zone, and people are trying to sell from there. So what happened is when it retested that level after going coming back down, when it retested that level, it fell down. It fell down, and here is the trade. What is the trade that I'm talking about? This is the one. So after falling down, it retested this level, this order block level. See, that is, it did not see order block level, but it tested the breaker block level. You can have as you can see this one. This is the breaker block I've been talking about. It retested that breaker block level, but it did not come back to the order block level. But still, if there is a breaker block and order block, I probably go for both of them combined because they're just beside, and there is a liquidity over this one. So well, there is a resistance over this one. So let's have a little more. It's fine to have a little more buffer, but what it's doing is it came back to that level. Yes, if you can see this in the 5 minute. This is in the 5 minute time frame in afternoon London session. Even though it's consolidation in higher time frames, what in the 5 minute time frame, what it does is it came back to the or breaker block level, and it gave us a good indication that it is down. It fell down, and this is the level of 50 to 60%. I will show you how that is forming. So we have retracement over here. So we take that and we'll just drag it to the low that has been formed. This is the low, this is the high. So as you can see, this level I have so, wait, this 52, yeah. So yeah, so 52, see this level which has been formed, this level above 50% is called a discount area for selling. For short sellers, this is the discount area. And as I'm trading gold, as my from my experience, gold actually trades and retest over 50 to 60% level in any time frame. Mostly 50%, it will try to take resistance from there and try to fall. But what I'm trying to tell you is, at that level, it will try to it will try to come back, it will try to retrace and give us good trades if we have a clear direction. So you see, it fell down from here. This was the recent low. So this was the recent low. So it tested the 50 to 60% this region in the 5 minute time frame. It retested this region. After this retesting this region, it fell down. It fell down to a level over here, over this level, and it took a little support from this level, taking support from this level, which is a 50-minute order block. If you can see in 50-minute time frame, I'll show you. I'll show you that. I can see it. Wait, 15, yeah, 15 o'clock. Yep, yep. Okay. So this is the one. It is suggesting that it has formed a doji over here, doji. So it is considering that there are orders over here because it took resistance from there, which suggesting there is something happening over here, and it's just taking a support from the last previous high that has been sounded as a resistance before. So it is taking from that, and it will try. It is trying to go up, but it's not going up, but it's trying to go up. It is covering these fair value gaps. Let's go back to the 5 minute time frame. So how the trade should be is so if you got the direction, if you think so this is the resistance level, this is the market structure, this is the resistance level. A trader can trade after this red candle, and put stop loss over here and trade to the downside, or he could wait for confirmation after this happening. After this happening, let's have a Fibonacci level to this level. We suggest ki you it retested again at this level, which is 60% level, also the breaker block. When it does that and it forms a red candle, it is a confirmation that we are looking for to the downside. So now the situation arises is, now I can take the trade. Now I have a confirmation to the downside, and also keep in mind to have a look at DXY. So this, I will put my stop loss to the next. What is this? Next fair value. This is the fair value present. So it could come back to this level and come back. So we have to have these stop losses in a certain levels where your trade might live. It shouldn't die. So there's a possibility that it will come back to this level, and for it will close these fair value gaps and fall from there. So that is a possibility. So have the stop loss over the level where you think ki it might retrace back and come down. So 30 pips of stop loss, and trying to take next liquidity zone, or covering these fair value gaps. And it happened very fast, if you can see that. That is the trade that we can look about in the London session. That is also 1 is to 4 risk reward ratio. And if you are okay with holding, then you could have holded to this level as well. I mean, it's it's not ideal to hold that, but you can hold to like this liquidity zone, this zone. Yeah, we can do that. But I would say ki, as we are taking in the 5 minute time frame, the target should be less and to the 5 minute time frame liquidity level, which is For a fair value gap, this is the fair value gap where it is ending. So this will be your target, first target. If you want to hold, the second will be over here. For this liquidity, there is liquidity over there, so second target will be there. Now if you want to hold till the third target, which is the liquidity zone over here, the target will be here. That is it. That is how it will work. I don't think it took liquidity from here. It did not. So that is why having a buffer in the take profit is important. You getting what I'm saying, right? So that is this the trade before we? Yeah, no, that is different. This is the liquidity one. This is the liquidity in 5 minute level. I don't think it took the liquidity, or did it take. We have to understand what's happening at this level. Did it take the liquidity? Did it not? It did not take the liquidity, but it still went. It's a possibility that, so having that buffer in the take profit is very important. So that is one trade that could have been done in the 5 minute time frames, and the rest of it is mostly consolidating. I would not recommend to take this long. Still, there is a good combination that it will go up, but still taking that is a risky trade, and it's consolidating right now. So yeah, that those are the things that could be taken. There are a lot of trades that could be taken, but still having confirmation and taking, after this confirmation, taking a trade is what makes you a good trader. That is yeah, those are the trades that we had. Mm, yep, that is it. Having stop losses at a certain levels is very important. Gold now is still consolidating. Even if you want to give you trades, there is no clear direction for it to give. So let's wait and see. Uh, yeah, let's end this stream. We'll try to come back if possible at 1:30. I hope you all understood what I'm trying to tell, what is going on over here. So it's just easy, but we have to have a great risk management strategy, and having those risk to reward ratios, and finding those trades and having those confirmations. It's just easy to trade. To trade gold is not that much difficult, but there is a possibility that things might not work out. Mostly they won't work. Like let me show you an example why some things might not work. As you can see, liquidity trader might wait. If you want to take a buy over here, he will wait after this liquidity zone, after taking this liquidity, and he will enter a buy. So it did not take the liquidity, so he would not enter a buy. But actually, it gave a 200 to 250 pips profit. So these things happen, so these buffers happen, these things happen. This trading view chart might not be as accurate. In xness, maybe there might be a different chart. I usually trade in xness. They might there might be a case that if the liquidity has been taken, and now the trader just have a confirmation to go long side. That is a one way to look at it. Yep, that is in the 5 minute time frame, and I don't want to show you 1 minute time frame at all, because 1 minute time frame is just a maze. And by the way, I did not, I did not specifically tell you the channel name. The channel name is Trading Maze or Trading Maze. We can have a lot of fun over here. This kind of analysis is what we want to do to maintain a good risk management strategy and to the future trades. So let's end this stream now, and we'll come back with more analysis, more live analysis. and we'll try to trade live. That would be more boost to our confidence. And please understand that I am not responsible for any of the profits that you make. You are the responsible for whatever profits you make, whatever losses you make. That is your responsibility. And I only can give you the financial advice. I am just like an advisor. I'm just telling you to do the understand. I'm just promoting the education over here. So I'm trying to tell you to learn these things, and understand how these things work. It's a education channel. So how trading happens is a really interesting way of looking at things. Many traders look in a different way. I have friends who look at the same chart in a different way. They will try to take a trade over this resistance and have a stop losses over here. So everybody looks trading in a different way, but having those confirmations and trading, that what I think is the main thing to do. So after having these kind of confirmations or retesting in 15 minute that we took over here, in 5 minutes, if you see the same trade that we took, it has formed the order block over here. While retesting this low, it has formed the order block, which 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 is satisfied over here, but not quite fully. What is suggested, it should fall down from here, but it didn't. Then this is the loss you will make. At the morning 6 o'clock, if some traders try to take this trade, he would have lost. But the timing that he's taking, this is a good trade actually. This is a good trade that this order block is a valid order block, and I think that is a good trade. But still, why it went up is because of low volume at that time, and only it's only Asian session. Most of people don't trade. See, if you see that candles over here, they're just going any direction, only one direction. I'm trying to go one direction, and it's just going from here to here. So yeah, in whereas in a New York session, that's not the case. See, it's trying to move up, it's trying to move down, it's trying to find liquidity, it's trying to find resistance. So as a price action trader, I would recommend you to trade in New York session mostly. Try to avoid Asian session, or if you have a different kind of trading strategy that works in Asian session as well, I would appreciate to know, and I will appreciate to uh, I will tell you to go on and do that. So yeah, this might be a loss for a guy who trades order blocks, and is trading in Asian session. So yeah, trading is most all about probabilities, and finding that probabilities and calculating them. That is just how it should be. Okay. So now it's consolidating. I don't think I can give you a trade right now. I could not see any trades. As I told you, if I want to give you a trade, I need to have this liquidity over this side, or or liquidity over this side, and order block test over here. Then I can give you a long after confirmation in 1 minute or 5 minutes. That can give us a boost. That will give us a great targets to the all-time high. Or else we can look for a selling opportunity at this liquidity zone if it forms a great confirmation to the sell side. The change of character in 1 minute, or testing this fair value gap and coming down. There's a lot of possibilities that can happen. So yeah, this liquidity testing this liquidity zone could happen. Anything could happen if the possible the things that we have to do is understand what will happen, and trade make the trades before it has happened. So if it's going to come back here, you if you have the intuition that will come back over this level, and I want to sell over here, then have your risk to reward ratio already set up in this way. I want to set up over here. I want to have stop loss over this level above 50, and I want trade to this level or this level, this high, whatever. So yeah, have those confirmations, and it is easy and very very good skill to have, very great skill to have. Yeah. So welcome to Trading Maze, Trading Maze. So let's end this session today. We will come back tomorrow and we will trade. We will trade live, or we might trade at 1:30. I will tell you if I'm available. Please join the Telegram channel. I will share the description link for it, and I will give you updates. Any updates if I have, I will be updating over there. So yeah, happy trading and goodbye. Take care.